Welcome to The Explainer. Today, we're jumping into a really dramatic week for the U.S. grain markets. We're talking about a perfect storm of politics, global trade, and, believe it or not, a data blackout that created just massive uncertainty for American farmers and traders. It sent shockwaves from the trading floors in Chicago all the way out to the corn and soybean fields of the Midwest.
Okay, so let's get right into it. The whole thing kicked off with this absolute bombshell. A photographer managed to snap a picture of a text message on Treasury Secretary Scott Bessent's phone while he was in a public hearing. And this text, well, it suggests a U.S. aid package had backfired, like spectacularly, letting a competitor swoop in, undercut American farmers, and sell right to their biggest customer.
You know, what's even more revealing is that right there on the screen, below that private text, the secretary was also looking at a very public tweet from a well-known industry analyst. Now, this wasn't just some random post. The fact that he was looking at it showed that the administration knew. They were completely aware of the anger that was just boiling over in the farm community about this whole deal.
So this just raises a huge question, right? How could a deal that was supposed to help stabilize a South American economy end up hitting American farmers right where it hurts the most, their wallets, during the most important time of the entire year? Let's break down exactly how this all went down.
The story really starts with this number, $20 billion. That was the size of a proposed U.S. credit swap. The idea was pretty simple. Give Argentina access to U.S. dollars to help shore up its struggling economy and its weakening currency, the peso. On the surface, it seems like a totally standard international finance move. And this right here shows you the domino effect perfectly. First, the U.S. offers the cash. Then, Argentina, desperate to get its own cash flowing, gets rid of its export taxes on grain. That makes their products instantly cheaper for the rest of the world. And who's waiting in the wings? China, the biggest soybean buyer on the planet. They immediately jumped on it, buying up a huge amount of these newly discounted beans. So a political decision made in Washington had a very real and very painful economic consequence for a farmer in Iowa.
Now, it's important to understand this bombshell news didn't just happen in a vacuum. The market was already unbelievably fragile. It was basically teetering on the edge because of some other surprising news that had just dropped. So just before that whole Argentina story broke, the USDA released its quarterly grain stocks report. And honestly, it was a bloodbath. It showed that our stockpiles of corn and wheat were way, way bigger than anybody expected. That sent prices for those crops just tumbling down to their lowest point in a month. Yeah, the soybean numbers were a tiny bit better than expected, but it was nowhere near enough to change the really negative mood in the market. So try to put yourself in their shoes. You're a farmer or a trader. You're already looking at these huge stockpiles and watching prices fall. You're bracing for a really tough harvest season. And then the Argentina news lands like a punch to the gut. It took what was already a really bad week and turned it into a potential crisis. And just when everyone, farmers, traders, you name it, needed clear, reliable information more than ever, the whole situation got exponentially more complicated. You could say the lights were, in a very real sense, about to go out. Then, on October 1st, the U.S. government went into a partial shutdown. For the grain markets, this was nothing short of a disaster. It meant the USDA, which is the single most important source of official data for everything from export sales to crop yields, it just went dark. And listen, this was not just some minor inconvenience. We are talking about the suspension of reports that literally guide billions of dollars in global trade. The weekly export sales reports, gone. The super important WASDE report, which gives this global snapshot of supply and demand, suddenly it was at risk of being delayed indefinitely. So why does this matter so much? It's because markets absolutely despise uncertainty. Without official, reliable data, traders have to rely on rumors, on speculation. And in a situation like that, the path of least resistance for prices is almost always down. Then, just as the market looked like it was in an absolute freefall, getting hammered by the Argentina deal, that bearish stocks report, and the data blackout, an unexpected lifeline appeared. And it came from the very highest level of government. President Trump went on social media and posted that he would be meeting with China's President Xi, and he was very explicit about it. Soybeans, the exact commodity at the center of this whole crisis, were going to be a main topic of discussion. He came right out and said that farmers were being hurt. The market's reaction? It was immediate, and it was dramatic. You can see it right on this chart. After dipping below that really critical psychological barrier of $10 a bushel, soybean futures staged this massive rally and actually closed higher for the day.
That single announcement was powerful enough to stop the bleeding and completely flip the market's direction.
But here's the thing. While this news brought a huge and very much needed dose of optimism, it also came with a really serious catch. The promise of a solution was on a direct collision course with the reality of the calendar. Okay, so the crucial point to understand here is that the U.S. has a very, very narrow window to sell most of its soybean harvest to China. It basically all happens between October and December. After that, China starts looking south, to South America, where Brazil and Argentina's new crops are ready to go, and they're often cheaper. So you see, the clock is always ticking.
And that brings us to the final, critical question. A meeting that's scheduled 4 weeks away means waiting until the end of October. What you should really take away from this is that an entire month, a huge chunk of that peak sales window, could just be lost. So even with a potential deal on the horizon, the damage from this perfect storm might already be done, leaving the fate of the U.S. farm economy just hanging in the balance.